Hello there and welcome to today's 5 with Fitz. I'm Keith Fitz-Gerald. Thanks as always for spending a few minutes of your valuable time with me today. So anyway, the S&P 500 is holding steady. Some up, some down as I record this ahead of big tech earnings this week. That's perfectly normal. Now, I think there's a good case to be made that the markets could rip sharply higher, which is going to catch a lot of folks by surprise if it happens. Now, to be fair, it won't be pretty, and there are very likely one or two sizable shocks still ahead, but sharply higher over time nonetheless. The thing I want you to think about that most people are not thinking about is that you've got to be in to win or you won't win. So here's my playbook. Number one, the markets could rip higher at the stroke of a pen. Tech numbers later this week don't even have to be all that great. Traders, to a point I made with the fabulous and super sharp Stuart Varney this morning, traders simply need certainty. You can watch that video of this morning's appearance elsewhere on my channel. Keep it in mind, keep in the game, stay focused. Number two, buy the best, ignore the rest. Here's what I mean by that. We talk about this a lot because it's very, very important. In fact, it's that important. People are so focused on what could go wrong that they fail to see what's going right, often when it's happening right in front of them. Now, I alluded to this in yesterday's Sunday Short. Think about it for a moment. I mean, really think. Put your emotions aside. All three indices are up substantially since early April when they bottomed out and fear was just taking over everybody's mind. As of last Friday's close, the S&P 500 was plus 10.89%, the NASDAQ plus 13.85%, and the Dow plus 6.5%. Stocks I favor, and that the one bar ahead family knows well, have done considerably better in many cases, having run 22.3%, 28.44%, 45.86% higher over the same time frame. Not every one of them, of course, but the point is, people play not to lose because they're thinking being smart. That's a shame. Imagine how differently your portfolio could look if you played to win. You don't need to take big risks or do anything crazy. You just got to focus. My philosophy is simple. Buy the best, ignore the rest, because it tends to pay way better over time. Now, hopefully, because we've talked about it at the risk of sounding like a broken record, you have a handle on what I'm saying. And I say that very simply because the overwhelming majority of investors don't. And if you'd like some help up in your game, I'd like to toss my hat in the ring. I'll be here. You can find me via my channel or my website. Number three, can IBM reinvent itself again? Now, IBM pledged a massive $150 billion U.S. investment over 5 years, including $30 billion specifically aimed at bolstering domestic manufacturing of quantum and mainframe computers, doubling down on AI and advanced computing leadership. All right, cool. Time to buy IBM. That's the question on a lot of people's minds. You could, and you may do all right if that's your goal. I personally would rather take a far more focused approach to AI. Now, call me crazy, but the question you want to ask yourself is whether you want to, A, bet on a legacy player that has underperformed the S&P 500 for the past decade, B, is reinventing itself yet again, or C, concentrate on a pure play, ushering the world into a future that could 5x in 5 years. I don't know about you, but I'd rather go with the future every time if that's the trade-off. Speaking of which, OBAers, the May issue and a new recommendation will be out this Friday if things go according to plan. We'll also be taking a deep dive into one of my favorite high probability option strategies and a look at how diagramming your investments could lead to greater profit potential. There's the portfolio review and more, of course, as well. Number four, Treasury Secretary Bessent just dropped a major hint about what's next. He says the first trade deal could hit this week or next. Now, this brings up something we've talked about a lot, another investing tip. The smart money never waits for the headlines to invest. It always positions ahead of them. Now, I call this Keith's rule of the back page, as in the best and most profitable opportunities are almost always found on the back page. People waiting for front page news tend to be a day late and a dollar short, quite literally. Now, number five. This is really interesting to me. Cybersecurity just got a $180 million vote of confidence. Atlassian, Snowflake, and Workday just backed cybersecurity startup Veza in a fresh $108 million funding round. The key here is that this highlights how aggressively big cloud companies are doubling down on security. Why? Because AI-driven threats aren't just coming, They're multiplying like rabbits on Red Bull. 10 years ago, cybersecurity was a niche. People would say, oh, yeah, cybersecurity, what's that? And they were vaguely aware of it, maybe personal identity theft if you got lucky. Today, it is boardroom priority number one. And it is very quickly, I submit, should be becoming investor priority number one, too. Number one as well, I guess, or one, two, anyway. It's repetitiously redundant, isn't it? But the other thing you want to think about is cybercrime is projected to become a staggering $24 trillion problem by 2027, which I think, by the way, is an order of magnitude low. AI-powered attacks now occur roughly every 39 seconds, according to GetAstra. Data breaches now cost companies an average of $4.45 million per incident, and most still remain undisclosed due to reputational harm and regulatory scrutiny they could inject or create. Corporate and government cybersecurity budgets are surging to unprecedented levels. Now, my favorite cybersecurity stock, a longtime OBA favorite, has delivered 470% over the past 5 years, crushing the S&P 500, which has turned in 105.22% return over the same time period. Just this year, it's up 37.7%, again outpacing the S&P's 9.5%. Over 3 years, it's more than doubled the broader market's performance, 107.8% versus 37.0%. And I see the advantage accelerating. Now, I don't want to brag here. That's not my style. That's not what I'm trying to accomplish. The point I want to drive into your head, just like I had to have it driven into mine, is that you'd better be focused on the best and ignore the rest. Cybersecurity isn't just an investment. It is a critical necessity. And executives with virtually unlimited budgets understand this. The thing that you want to think about is if you are not actively investing in cybersecurity, it is time, I submit, for a serious rethink on your part. So bottom line, you can have results or you can have excuses, but not both. As always, let's make it a great day and start the week strong. You got this, I promise, and I will see you tomorrow.